Right now, somewhere between Zurich and Wall Street, there's a deal sitting on a table that could quietly change who actually owns the World Cup. Not the trophy, not the tournament on the pitch, the money behind it, the broadcasting deals, the sponsorships, the ticketing, everything that keeps FIFA running. And the man steering this deal is the same man who stood on stage lifting the trophy just weeks ago at the 2026 final, Gianni Infantino. FIFA has now confirmed it's exploring a plan to sell minority stakes in a brand new company, one built to control the commercial rights to the World Cup and the Club World Cup, to private investors. We're talking about a business valued at around $20 billion. Within hours of the news breaking, UEFA fired back with one of the angriest statements we've seen between these two organizations in years. Would you be comfortable with private investors owning a piece of the World Cup's business side? Some fans are asking exactly that right now. So what's actually in this deal? Who's involved, and why does UEFA think this crosses a line FIFA should never cross? Let's get into it. Here's the background. On Tuesday, FIFA confirmed reports that had already been circulating in British and financial media for days. The plan centers on a brand new entity called the FIFA Forward Enterprise, or FFE for short. The idea is to take FIFA's commercial operations, broadcast rights, sponsorship deals, ticketing, licensing, everything that keeps FIFA running, and FIFA would keep majority ownership. But a meaningful minority stake, reportedly around 20%, would be sold off to outside investors. According to FIFA's own statement, the goal is to raise up to $4.2 billion, based on an initial valuation of about $20 billion for the new company. FIFA says the money raised would go toward boosting funding for its 211 member federations, with forward development funding reportedly rising from $8 million per federation to $20 million for the 2027 to 2030 cycle, and climbing further after that. FIFA is working with the investment bank JP Morgan on structuring the deal, and the reported lead investor is Thrive Eternal, a fund connected to Joshua Kushner. If that name sounds familiar, it's because his brother is Jared Kushner, son-in-law of U.S. President Donald Trump. That connection matters here because Infantino's relationship with Trump has already drawn attention throughout this World Cup cycle, and it's part of why this story is generating so much reaction so quickly. Here's where things get interesting, though. FIFA Council members, the people who are technically supposed to help govern these decisions, reportedly found out about this plan largely through the same media reports as everyone else. That's not a small detail. It's actually at the center of why this is becoming such a big controversy. Before we go any further, if stories like this are why you're here, go ahead and hit subscribe. This channel is tracking every twist of this World Cup business story as it develops. So let's break down what this deal actually looks like, because the details matter. The new company, FFE, would be built to house FIFA's commercial and event operations, basically everything that generates money outside of the actual football being played. FIFA insists it would remain the majority owner, and that FFE would stay a FIFA-controlled subsidiary with, in FIFA's words, the benefits reinvested back into football worldwide. But then there's Gianni Infantino's own position in all of this. Multiple reports, including from The Times in London, suggest Infantino could take on a role as commissioner or possibly chief executive of this new company once his time as FIFA president ends. Under FIFA's current statutes, that would happen in 2031, assuming he wins re-election next year, which he's expected to seek. Reports have floated a salary in the same range as NFL Commissioner Roger Goodell, whose pay is somewhere around $64 million a year. FIFA has pushed back a little on that specific detail, saying discussions about Infantino's future role and compensation haven't formally happened yet. But the fact that his name is already attached to a future leadership position in a company that doesn't officially exist yet tells you something about how far along these conversations already are. Then there's the investor side. Thrive Eternal, Joshua Kushner's fund, has been named as the group expected to lead the private investment. JP Morgan is acting as financial advisor on the structure of the deal. And it's not happening in a vacuum. It comes just weeks after a World Cup where Infantino's ties to Donald Trump were already under a microscope, including the moment during the tournament when a red card suspension involving American forward Fuller and Balogun was controversially lifted following outside involvement. Think about it. FIFA has spent decades presenting itself as a not-for-profit organization based in Switzerland, existing to serve the global game. Selling even a minority stake of its commercial engine to private investors with connections running towards a sitting U.S. president's family is a very different look. That's exactly why this story is moving as fast as it is. If you're finding this breakdown useful, tap that subscribe button now. It genuinely helps the channel keep pulling these stories apart as they happen. Now here's where some historical context helps explain why UEFA reacted so fast and so hard. This isn't the first time Infantino has tried to bring outside investment into FIFA's structure. Back in 2018, he was involved in a proposed $25 billion deal with the Japanese investment group SoftBank, aimed at funding an expanded Club World Cup and a new Global Nations League. That deal ultimately collapsed after fierce resistance, mainly from European football, worried about outside money reshaping the international calendar. Sound familiar? The bigger issue is that FIFA and UEFA's relationship has already been under real strain heading into this. UEFA President Alexander Ceferin chose not to attend the 2026 World Cup final, a decision that was widely read as a protest against a string of FIFA governance moves he disagreed with. So this private investment plan isn't landing in a calm, neutral moment. It's landing right on top of an already tense relationship between the two most powerful bodies in world football. This matters because private investors, by definition, are looking for growth and return, and one of the clearest ways to grow the value of a World Cup business is to hold the tournament more often, or make it even bigger than it already is. Infantino has already signaled that further conversations are expected about expanding the World Cup from its current 48 teams to as many as 64. Nothing is locked in, but the timing of that conversation, right alongside a private investment plan, is not going unnoticed by critics. What makes this different from 2018 is scale and proximity. The SoftBank plan was mostly about a new competition. This plan reaches directly into the World Cup itself, the single most valuable asset in global sports. And it comes with a named political connection that simply wasn't part of the conversation 8 years ago. What's different this time is that preliminary terms are reportedly already signed, JP Morgan is already involved, and FIFA itself has confirmed the broad strokes publicly rather than letting it stay a rumor. That alone tells you FIFA is treating this as a real possibility, not just an idea being floated to test the waters. Quick reminder to subscribe if you haven't yet. There's a lot more still unfolding on this one, and you won't want to miss where it goes next. So how does any of this actually touch players and fans? Player unions have already been vocal about scheduling and welfare concerns tied to FIFA's recent expansion moves, including the enlarged Club World Cup. If a private investment structure pushes toward more frequent or bigger tournaments down the line, that conversation about player welfare and packed calendars only gets louder. FIFPro, the global players' union, has repeatedly said it wasn't properly consulted on past calendar changes, and this kind of structural shift is exactly the type of decision that affects how often top players are asked to play, travel, and recover. For fans, the immediate impact isn't obvious yet, but the long-term questions are real. Would ticket pricing shift if commercial decisions are partly driven by investors looking for returns? Would host selection or tournament format start factoring in what makes the product more valuable to shareholders rather than what makes sense competitively? None of that is confirmed, but it's exactly the kind of question fans and supporter groups are already raising. Fan groups have come out fairly quickly backing UEFA's position, framing this as a moment that shouldn't just get waved through quietly. And that's really the emotional core of this story. For a lot of longtime fans, the World Cup carries a certain meaning precisely because it's not supposed to feel like a private equity product. Whether that perception survives this deal, even if it's ultimately approved in some limited form, is a genuinely open question. If you're new around here, subscribing is free, and it means you'll catch every update on this story the moment something new breaks. So what happens from here? Right now, FIFA has only confirmed that a consultation process has started. There's no binding agreement yet, and any final version of this plan would need approval from a majority of FIFA's 211 member associations. That's a high bar, especially with UEFA, Europe's most powerful football body, already firmly against it. Best case scenario from FIFA's perspective, this becomes a carefully limited structure, minority, non-controlling stakes, extra funding flowing to smaller federations, and Infantino stepping into a defined future role once his presidency legitimately ends. FIFA has repeatedly stressed that outside investors would have no operational control over the tournaments themselves. Worst case, or at least the scenario UEFA is worried about, this becomes the first step toward a more commercialized, more frequent, more private capital-driven version of the World Cup, one where decisions about the calendar and tournament size are shaped as much by investor expectations rather than by football logic. UEFA is reportedly weighing its options in response, and some elite clubs have voiced serious concerns privately as well, even without saying so publicly yet. So which side are you leaning toward right now? FIFA's growth pitch or UEFA's warning that this crosses a line that shouldn't be crossed? Given how quickly UEFA responded and how strained the relationship between the two organizations already is, this isn't likely to be resolved quietly or quickly. Expect more statements, more leaked details, and probably some kind of formal vote or council decision in the coming months. So, to bring it all together, FIFA is exploring selling a minority stake in a new company controlling the World Cup's commercial rights in a deal that could be worth around $20 billion, involving JP Morgan and investors tied to the Kushner family. Gianni Infantino could end up running that company once his FIFA presidency ends, and UEFA has responded about as strongly as it possibly could, calling it a line football's governing bodies should never cross. Nothing here is finalized. This is still very much a proposal, working through consultation with plenty of room for it to change, shrink, or even collapse entirely, the same way Infantino's 2018 SoftBank plan did. But the fact that this conversation is even happening right after the biggest World Cup in history just wrapped up says a lot about where FIFA's leadership sees the sport heading next. So here's the question for you. Do you think this kind of private investment ends up protecting the World Cup's future or slowly changing what it actually is? Let me know what you think in the comments below.